Markets have almost recovered from the damage faced in 2016 so far. But have the problems been resolved? Have banks become stable? Is it possible that conditions are now secure and imports, exports, and the general economy of most nations have been restored? Of course, the truth is that it isn't the case. The Plunge Protection Team, formerly titled the President's Working Group on Financial Markets, which was established in 1988, is still working hard to maintain order. Panic will ensue, and the earth will rumble. You came here for the truth, so let me unveil that for you. Today, we're going to talk about the biz warning that central banks cannot prevent this crisis at this time, unless something changes, and it doesn't seem like that is going to be happening anytime soon. The bulls have gained the upper hand in the US stock market in recent weeks, and strategists are cautiously optimistic the rebound will continue. That's right, everything is just fine. A lot is riding on whether the economic data can continue to hold up. I don't know what data they're referring to. It's looking bad to me. Since upbeat reports on recent weeks have eased fears the United States may be headed for a recession. Really, this is complete opposite of what I've been reading. The job reports, the latest signal that the worries were overblown. See, again, this job reports, I've talked to people in the industry who suggest, and with a straight face, that the jobs reports are actually important information. If you read the job reports and you believe that this is a factor, and I'm talking about the numbers that come out from the government, and you believe it's a factor where jobs move 100,000 in one way or another, you really need to sit down and read a few books, because it is absolutely not important. Now, the overall employment, like the civilian labor force participation rate, yes, very important. These job reports, not at all. So the 100-day moving average, again, they always look at these moving averages. 50 days and 200 days I find are the most common, which they speak about often. And they factor these technical indicators in being the most important thing. Now, I understand in a computer age that we are in, where human beings don't matter to the stock market anymore, these technical indicators do have a purpose, I understand. But to suggest that things are okay, this is what I'm looking at. Let's say, I don't like to use this word, but the macroeconomic factors, they look at it, well, everything's fine. Look at the 100-day moving average. Like, that to me is mind-boggling. Just to think about somebody who controls people's money, and this is what they talk about. It's crazy. Have art prices peaked? Auction houses report falling profits as the value of even Picasso's tumble. And in this case here, 10 million less than it did a few years prior. So is the suggestion here that the richest of the rich people are now not purchasing art, or is it a fact of they don't have the money to buy it? What is the situation here? I really do see both sides here. I see a lot of multi-million-dollar mansions being sold in certain areas, and we see the more expensive homes being built. But ultimately, I see the other side of it as well. I see this news. So I'm just bringing it up, just wanted to note this, because you do see collectibles and art being purchased by the wealthiest of people in a time when they're trying to get into more real assets. So they take their money out of the stock markets, out of the banking system, and they buy up real estate, they buy up land, and they buy arts and collectibles. So we're going to keep an eye on this definitely. Out of CNBC, while financial markets have regained some composure since the start of the year, mounting global debt levels, sticky growth, and the prospect of long-term negative interest rates are issues that are not going away anytime soon. That's according to the BIS, the Bank for International Settlements. A very important group, despite the fact that they're obviously on the inside. I really do enjoy reading their reports because they're very telling. You know, the IMF, who's part of the whole criminal organization here, the banksters, they actually have a lot of good things to say. Their solutions are terrible, but when you read the reports, actually they point to a lot of real information. Concerns about growth in China and other emerging market economies and the health of some of the world's largest banks made for a very difficult start to 2016, resulting in one of the worst stock market sell-offs since the financial crisis of 2008. This is absolutely true, and this is the type of indicators that I like to point to. There are real concerns happening. There is real lack of prosperity. Underlying some of the turbulence was market participants' growing concern of the dwindling options for policy support in the face of weakening growth outlook. That's exactly what I'm talking about. How the central banks around the world are basically losing faith. And what can they do? They go to negative interest rates, which they don't really like to do. They know what happens. And they also don't want to have to print any more currency, despite the fact that people believe somehow that it doesn't generate higher prices, although that's exactly what happens over the longer term. You can see how this fallacy is not really being upheld when you look at historical data. It's just the way it is. These central banks are making these failed policies over and over again, and they know what's going to happen. Unfortunately, they're going ahead with it anyway, but I just wonder where the biz differs from other central banks in that what exactly do they want them to do? Because ultimately, you know, if they were to pull a lot of the criminal activities that they do, like the NSA, for example, if they were to pull that and use that money to fund their deficits, is that the result? Is that what they want them to do? Or do they want them to then print up currency? What exactly are they going for here? That's all I'm trying to suggest. Now, in my book, I talked about the most important modern day speech that I'm aware of, and that is 2002, Ben Bernanke made this speech on the Federal Reserve, and this is part of what he said. The U.S. government has a technology called a printing press, or today its electronic equivalent, that allows it to produce as many U.S. dollars as it wishes at no cost. He referred to Milton Friedman's helicopter drop of money to measure to fight deflation. And then I basically say that, look, they're going to create inflation no matter what. Now, some people, they're on both sides. I believe it's going to be a deflation. I believe it's going to be a hyperinflation. Well, if you forward over to the speech from 2002, you actually will see at the time Governor Ben Bernanke, his speech is titled Deflation, Making Sure It Doesn't Happen Here. It's a great speech. Print this off, read it to yourself, and remember that you will have to keep referring to this regularly. This is their plan. They talk about doing exactly what they did during the Great Depression, and that is devaluing the dollars 40%. What would happen today if they devalue the US dollar by 40%? You're going to have a shockwave sent throughout the system that is going to bring people to their knees. This is a very, very crucial speech. I highly recommend everybody read this if they haven't already. And I just wanted to connect this in. I've talked about this consistently because I believe it's very important. And just to give a shout out to SGT Report, he's talked about this and has his own mini documentaries on this that I find incredible. And this is it really makes me sick actually to read this type of information, but 2 men were shot in a Brooklyn Center shopping area parking lot Saturday after an apparent argument over a new pair of Air Jordan basketball shoes. This isn't the first time this has happened. People have literally died over some stupid running shoes. And this is the kind of behavior that people are willing to engage in over slave labor made goods that will ultimately not be in style, the next year after. And this is the type of activity for something so foolish, so frivolous. What will happen when the store shelves empty? This is what I fear. That as soon as a little bit of a problem is put onto the general public, they're going to riot. They are going to cause havoc. And this is what we have to worry about. You want some information, some truth. This is it. You're looking at it. This is what we should be really scared about. But try to find this type of information brought into the financial crisis type information. You don't see that, but I see the connection there. I hope that you do. Make those connections, connect the dots for yourself to try and then predict the future. You retain and gain your access to that crystal ball. Take the crystal ball, flip it around, and view it at 180 degrees. If you found this video informative, then please give me a thumbs up. It really helps me to boost these videos up, to spread the truth. If you found the video informative, I know you will find my book, The Money GPS, even more informative. You can actually flip through the pages of the book. If you go over to Amazon, they have a look inside feature, which allows you to flip through the pages of the book to see if you like it. Take care.